This session is being moderated by Mr. Hiren Chandaria, the Managing Director, Middle East and Asia for Monetary Metals Limited, a Sloan Fellow from London Business School and a CFA charter holder. Mr. Chandaria has led and scaled ventures exceeding $1 billion USD while holding a senior leadership role with significant P&L responsibility. Please put your hands up as I invite Mr. Hiren Chandaria onto the stage. Our two contributors for this session are Dr. Renisha Chainani, the Head of Research for Augmont-Gold for All. Dr. Renisha Chainani leads the firm's research and strategy on gold and other precious metals for investors and industry participants. She's a seasoned analyst and a market expert and widely recognized for her data-driven views on gold prices, supply-demand dynamics, investment strategies, and frequently shares insights through media appearances. Welcome back, Dr. Renisha. Our final speaker is Dr. Bharat Tharwani, the Technical Analyst, CMT Association, USA. Dr. Bharat Tharwani has cleared all 3 levels of the Chartered Market Technician program and also holds the CFT designation in technical analysis. And as our sessions chair begins steering this session, I'm hoping as our voices travel out, people will also troop in. Over to Mr. Chandaria for the final session of the conference.
Hi, good evening, everyone. Thank you very much. I'm here to moderate the session on silver price outlook. Silver is most underrated asset as we speak today. Today, precisely, that's why this session is super important. Throughout the day, we had discussions on inflation, on industrial demand, on investment demand. But as we close the day, let's bring it all together and find out what's happening and what we think about it. Silver does not just serve one particular purpose. It has a dual role. It's a monetary asset. It acts like money. It's influenced by dollar value. It's influenced by currency debasement, central banks buying, inflation. At the same time, it's an industrial metal as well. The new age technology demand for silver is quite high. Look at solar panels, electronics, EVs, and that's also driving up the prices. So how does both these things juggle together? Let's find that out. If we look at recent price action in 2025, silver appreciated by 147%. So that's quite remarkable, right? But that did come with volatility. And volatility did come not without a reason. There was a reason to it. Silver, again, has 2 different functions. One is risk on, one is risk off. If it's risk on, then it acts like industrial metals. If it's risk off, acts like a gold metal. It should act like a gold metal. I'm using the word should, but off lately we would have seen that at least at the start of any trend, it does not act like one. And we will find out the reasons why. If you look at it, there are 2 ways of looking at it. One is fundamentals, one is technicals. Fundamentals gives you the structural strength, the platform, and technicals give you the entry point, timing of the market, when to enter, when to exit. So we'll bring both of this together to finally derive the price outlook for silver. If you look at back in India, what is it? India is one of the largest, has been historically one of the largest consumers of physical silver. And off lately, it's changing a bit. What is changing? We are becoming digital asset owners. It's becoming a hybrid of physical assets as well as digital assets. And the event of ETF, the rise of purchasing power of people, digitalization, has all lead to this demand coming from ETFs and other structured products, which is resulting in demand of silver increasing. If you look at it, there are fundamentally 3 main reasons globally why silver prices are going up. Silver is likely to be in the 6th year of deficit. After 5 straight years of deficit, that's quite a remarkable thing after ages. Demand is driven by the structural new economic demands like technology in SVs, PV, everywhere. And there is a very slow response to the higher silver prices in terms of the mine supply. Because of that, we need to find out where the interactions of fundamental technicals comes and how we are going to look at it. And to take this discussion further, I would request Dr. Renisha to come and give a presentation, followed by Dr. Bharat, and we would be having a small question-answer session after this panel discussion, and then we'll be asking questions to you. Then would be the polling results. So thank you very much.
Thanks, Hiren, sir. It's an honor to stand here in front of all of you and talk about silver. Thanks, Eventel team, for giving me this opportunity. As we all know, silver has given phenomenal returns in 2025, so it's the hot commodity now. So if you look at any commodity, we always look at the supply demand first. So as we have been talking about supply in last 2 days, we already know that it's a commodity with deficit from last 6 years. Mine supply has been continuously falling, and we have seen continuously drawdowns in this commodity. So yes, structurally, supply is very, very problematic thing. If you look at demand, demand is very strong from investment side. We have already talked about it, ETFs, digital silver. So retail demand, investment demand is very strong. Also, the industrial demand, that is the most important factor here, that is supporting the prices. And in industrial demand, there are the main 4 pillars. First is EVs. EV sector, if you talk about, each vehicle uses 25 to 50 grams of silver, and it is more than 70% more than the IC vehicles. This sector is continuously growing by 5x from last 5 years. We talk about AI data centers. That sector is also grown almost 50x from last 5 years. And each of this AI server uses 200 grams of silver. 5G technology, electronics, again this sector is growing by 3x. Solar 3 to 5x. And if you talk about solar sector, we have already been talking about the thrifting. Yes, that is going to impact the prices. And actually, I think that is already discounted in the prices now. That solar demand, solar panel demand, or EV PV demand would be 20% less this year. So it is already discounted in the prices. So whatever thrifting we are seeing is going to be compensated by EV, AI, and 5G. So I think industrial sector demand would be again strong this year. So to compare with headwinds and tailwinds, there is a tug of war this year, I believe. And there are various positive factors and negative factors that are pulling the prices on both ways. Positive factor because if you talk about positive factors, as silver is 60% industrial metal and 40% precious metal, it is getting its support from gold also. Safe haven flows that goes in gold, it also comes in silver. So due to this global uncertainty, going forward too, we'll see good demand coming in from investment, and that is going to support the prices. We already know there's a supply deficit, green industrial demand, strong bar and coin demand that is going to increase by 18% this year, in fact. And we have, again, restrictions. So all these are the positive factors. Negative side, we are speculating like there could be slowdown in the US and China, so that could impact the prices a little bit. And we have already seen speculative position unwinding, and it can continue for a little time ahead also. So these are the 2 factors which are going to impact the prices. So before coming to my forecast, I would like to draw your attention to what the world is forecasting, what the other financial institutions are forecasting. So this is a list of all the big financial institutions who have forecasted silver. Bear case scenario is that minimum prices can go down up to is $55 to $58. Base case scenario is $80, and bull case scenario is it can go up to $120, $150 also. And there are few analysts who are even forecasting 200 plus. So this is forecast from my side. It depends on what is happening on the macroeconomic side. If you look at the 3-month scenario, I would say I'm expecting a range-bound consolidation because of geopolitical tensions that is somewhat putting prices under pressure, and there is risk of sentiment. So as of now, the range which I'm expecting is $65 to $95 in next 3 months. If I talk about till 2026 end, if $100 level is taken away, we could even see prices going up to $120 because of all the positive factors that I've talked about: deficit, EV demand, and Fed rate cut expectation if that continues. And over the 12-month period, I'm expecting it can even go up to $140. And the bear case scenario, it says it can remain here around $75 to $80. So any of the scenarios you take, any of the time horizon you take, our view is still bullish. Price won't fall below 55, 60. This is the maximum downside that everybody is expecting, and upside that is expected is $120, $140. So I suppose the risk-reward ratio is very good still at these prices, and these prices still could be used as a buying opportunity. Thank you.
Thank you, Dr. Renisha. Now I'll invite Bharat to give his presentation.
Thank you so much for all of you for being here. Thank you, Eventel Global, for this wonderful opportunity. And I'm into technical analysis, and I'll say everything which is based on charts. So I have a brief question to all of you. All of you are into fundamentals. Just a brief question. What is the role of technicals? All of you, if anyone can come up with the answer. Do you think technicals is important? Why we must learn technicals? Okay, I'll make it very easy for you. I'll just say certain things, you have to say yes. Can technicals help us define, can technicals help us make better investment decisions? Yes. Can they help to bridge the gap between the intrinsic value and the market price of the asset class? Can they do it? Can they help us in risk management? Can they help us in designing specific trading strategies? Can they help us in exit strategies? Can they help us in an overall risk management framework to define and execute it? So that's the answer. So I'll request all of you to look technicals as well, and over the next couple of slides, you'll get a lot of hidden truths about silver. If I have to say that if there is the best chart of any asset class across the entire universe of technical analysis, it's going to be silver. You all know that in 1981, silver was trading around $45. Then it made the same high of $45 in 2011. And in October 2025, again that $49, $50 price was reached. And what happened on 13th October 2025? There was a trend line breakout of 45 years. Show me any chart across any asset class which has had a breakout of 45 years. There's nothing close to it. The second best was crude. Crude had a similar breakout in 2004. There was a breakout of 34 years. But silver is always the number one. The silver has surpassed crude oil in terms of charts. This is the best chart you'll ever see. The similar setups, the multi-year breakouts, which when we see on equities, we see at least 100 to 200% gains in those stocks. So this is what happened in silver in October. And the people who were shorting silver around 50, 60, 70, they could have easily calculated the price target based on this cup and handle pattern. The cup and handle, the depth of the cup and handle pattern was, the depth had $45, you project that $45 price to $50, your targets come 95. It's as simple as that. Any technical analyst on the world would have easily said on 13th of October that silver is destined for $95. And this is what happened. We could see the history in front of our eyes. So why this breakout was very crucial. It was the biggest cup and handle pattern. As I said, it took 45 years for this chart to form. It was very fast and ferocious because such opportunities don't let you make easy money. It aligned with the macro environment. It aligned with the central bank buying. It aligned with the de-dollarization. It aligned with geopolitics. And it ended the years of price suppression that we saw by the global banks. So how does it appear on chart at present? It has corrected from 120 to 75. The journey started from 45 to 50, went till 120. It's currently trading at 75. How do I see on charts at present? Still the primary uptrend is intact. It is trading above its key moving averages. The 20, 50, 100 and 200 period moving averages. The price is still above these moving averages. The primary uptrend is intact. It will not get broken below 62. The moment silver drops below 62, I'll be bearish on it because the primary uptrend is intact. It's trading well above this moving averages. RSI, the relative strength, when we measure its strength, the strength of a trend, we use this indicator, relative strength indicator. It's currently around 50. And I think in the recent consolidation, silver is providing a very good re-entry point solely based on charts. I won't comment anything based on fundamentals, but based on charts, I would say it's a very good entry point. Now, all of you, what is the biggest hurdle in trading silver? What is the biggest factor that drives silver crazy? Is the volatility? Absolutely. All of you have seen that how volatile it has been. So how do you manage the volatility with technicals? You can use Bollinger Bands, which are the only indicators for driving the volatility to understand the volatility. And the derivative of that Bollinger Bands is Bollinger Bandwidth Indicator. Now, when the silver was trading at $120, the Bollinger Bandwidth was trading at the highest. It was 70. And it said that extremes in the sentiment marked the end of trend. And that is what we witnessed. At $120, there was a reversal. And it also aligned with the crowd behavior. We could see all the influencers, social media, front page, magazines speaking about silver. So as per current scenario, the primary uptrend is intact. Whatever I said, all the EMAs, you can see exponential moving averages are pointing up. The relative strength is high. The trend direction is positive. The Bollinger Bandwidth is currently at just 20, which was 70 in the month of Jan. This is a simple trend following strategy if you understand technicals in depth. So this is just a price projection based on the current scenario. There's a very good support at 68. And I don't think that 68 will be breached very easily. There is a resistance at $88. And I think that we may do some bit of consolidation around 80, 85 levels before heading to the ultimate targets of 120, which was a recent high seen in the month of February. I think Manit Bhai spoke about the gold-silver ratio in one of the presentations. And I believe that gold-silver ratio currently around 62, 63, it's trading around those levels. And we can see a bit of breakdown. As per charts, I see a breakdown in gold-silver ratio. That means the silver has to outperform gold. And I see this ratio coming till the levels of 48. Historically, 80 has been high and 20 has been low. Mostly, these are the extreme readings. At 80, it tops out, and at 20, it bottoms out. So currently, it's at 62. I see it at coming to 48 levels. So just to summarize everything, I still believe the primary trend is intact, and we can see much higher targets from here. And to manage the volatility in silver, you can use the volatility-based indicators, primarily the Bollinger Bandwidth, the bandwidth indicator, and the periods of low volatility, low volume, lower retail participation can be very good entry points for silver. Thank you.
Thank you, Dr. Renisha. Thank you, Bharat. Okay, so let's see if we can steer up some real controversies or debates out here. Okay, it is generally said that you can have technical charts for short-term analysis and fundamentals for long-term analysis. So first, Renisha, to you, as a PhD holder in bullion markets and looking at fundamentals for gold, silver, what do you feel? And what do you feel about technical analysis?
Yeah. So I would say for any asset class you are looking at, not only technicals, not only fundamentals, there are many things that are important to look at. I would say intermarket analysis is important. Talking about currency market, bond market, equities, commodities, everything, works at tandem. Nothing works in isolation. So you need to look at all the markets. You also need to look at sentiment in the market, whether the sentiment is risk off, whether it is risk on. So sentiment analysis is important. Yes, fundamentals are very important. And if you want to time the market, look at the entry and the exit points, technicals is important. So you need to look at everything, fundamentals, technicals, sentiment, intermarket, then only you can have a perfect trade. That's what I think.
Bharat?
Yeah, I'll absolutely agree with Renisha, ma'am. Nothing works in isolation. You have to integrate the analysis. If I have to say specifically about silver, silver has, in the recent times, I have seen that silver has an increased correlation with cryptos, with AI theme, with the Nasdaq index. Then at the same time, it is obviously having a negative correlation with the US dollar. It has a negative correlation with bonds. I also see it negatively correlated to crude. So as a technical person, as a fundamental person, intermarket analysis is a very integral part of the analysis, and we must integrate. Nothing works in isolation, even technicals don't do. But the best part is when everything aligns all together, you can make excellent entries and exits.
So basically what we are trying to say is by intermarket analysis is where the fund is flowing, the color of money is the same, right? Yeah. Major hedge funds globally do not concentrate on one particular asset class. They, where the opportunity lies, they capitalize. That's what...
Yeah, absolutely.
Dr. Renisha, what do you feel? Silver is currently acting as a monetary asset or as an industrial asset. How are the fundamentals playing out, and what is your feel? Who's winning?
So currently, I think silver is unambiguously wearing both the hats as a financial asset, monetary asset, whatever you call it. It's playing a part of both, because as I said, silver is 60% industrial metal, 40% a precious metal. So it is taking cues from both. As gold prices started rising last year because of uncertainties, safe haven demand flows, all those things, flowed from gold to silver. So it got cues from there. And again, when we saw that this flows coming down, outflows coming in, again, everything shifted, like from one asset class to other asset class. So yes, it's a financial asset, it's a monetary asset, it's playing all the roles together. And that is why, like what we are talking, if everything aligns, if fundamentals are good, like we know that it's a deficit market, if financial flows are good, if we are seeing that money is flowing into this sector, if intermarket analysis is good, if sentiment is good, if everything's come together, then only we'll see such a metaphoric rally which we saw in silver. So everything aligned in this sector last year. That's why we saw this rally coming in.
So Bharat, how does this chart of silver compared to other markets, including Nifty, S&P, copper, gold? What do you feel about that?
As I already mentioned, it's one of the best charts. The reason, the cup and handle patterns, they are usually very long-term patterns, and they take time to form. Silver, this cup and handle pattern took 45 years to form. What does that mean? It has a very simple meaning, that for the previous 45 years, silver was being accumulated. The price was suppressed. And what happened on 13th October, you can have a simple analogy like there's NASA. NASA is assembling all the spacecraft components, and then they decide a launch date. And October 13th was the launch date for silver to fly like a rocket and shoot up crazily.
Could we have known before the time?
Yeah, I could capitalize it, and as I said, any technical analyst, it was the mother of all breakouts, and it was a very easily identifiable trade, and it was like a free hit, and I hope a lot of people sitting over here must have capitalized this big move in silver as well.
I'm back to Dr. Renisha. You mentioned that in your presentation, I was looking at the slide, and it mentioned that EV demands is going. Solar PV demands is going down, right? It's moving down by 20%. EV in the Western world, if you look at it, most of the subsidies have been taken off. There is a little less thrust on that. China, India is still doing good. So how does this fundamentally, it seems to me like we are making a bearish story, but we are twitching it to look bullish. So what's your feel? Where am I getting it wrong?
No, I don't think so. We are moving towards a bearish story. So there are some indicators which are the volatility amplifiers, and some are the drivers which give us the direction where the prices would be moving. So yes, solar demand is coming down by 20% from 186 million ounces to 151 million ounces for this year. That is what is forecasted. We all know that, but I would like to tell you that other things, other industrial demand like EV demand, like 5G sector demand, like AI data centers demand, that sectors are again growing by 5% CAGR. So if you put together, everything is compensating what solar sector is, coming down. It's 20% it is coming down, so 5% each CAGR, it is compensating that. Secondly, industrial demand is forecasted to be 650 million ounces this year. This is again the highest industrial demand till date. So it's not less. We are not going into surplus. We are still in deficit. So taking both these accounts, taking both of these things, I think other things are compensating this, and this won't impact my bullish view on silver. It is going to be compensated by other things.
I asked Bharat a follow-up question, so I'll ask you as well. In terms of, do you see a real risk of silver substitution? It would be substituted by other metals, but other technologies. What would happen?
I don't think so, because the industrial demand, what we are seeing, which is amplifying every year, which is growing by 5x which has grown by 5x in last 5 years. Silver usage in each of this is less than 5%. Like if vehicles, EV vehicle is using silver, so its cost is less than 1%. They are just 0.5%. So if the prices double from here, from $75 to $150 or $200, so their cost would go up from 0.5% to only 1%. It won't increase that much. Similarly for AI data centers, similarly for other sectors, right? So silver constitutes very minimal amount in their unit cost of production, right? It is less than 1%. So even if prices double, it won't impact much, and there won't be replacement, because the characteristics and different products have different characteristics. So it is not easily replaceable, and it takes a lot of time to replace anything.
So if silver moves from $75 an ounce to $150 an ounce, it would hardly make a difference to any of the industrial application.
In majority, it won't. Few industry might shift, but I think 80-90% won't be impacted by it.
That's amazing. If I were to ask Bharat, you asked audience to take a snapshot of a slide where you're talking about how you're analyzing. If we are to ask an AI or any other expert to say what could go wrong there and why this is not likely to span out, what would that be?
Honestly speaking, I haven't explored AI much. I'm more of a discretionary trader, and I rely mostly on my learnings, which I've got from the CMT program. But I think I don't know how exactly the AI agent will say, but for an individual who is trading silver, and if he has to design some good strategies for trading silver, so I think a very well-defined strategy and trading silver only during the phases of low volatility with use of strict stop losses and making our pre-planned exits and entries can help us navigate through those things.
Cool. Volatility is driving out, it's dissuading people to invest in silver. What do you feel about that? If it's slide down from 120 USD?
Okay. See, when you're trading silver, the behavior of silver is very similar to a small cap stock. So you know the risks of trading with a large cap stock and a small cap stock. They will have upside move and downside move in extremes. So what one can do is when you are trading silver, you trade with ETFs more. You buy physical more instead of trading much in futures, because futures are something that the volatility in silver can wipe out traders. So you can have that safe allocation with ETFs and physicals. So that could be a good strategy. And in MCX, if someone is trading futures, please trade with very strict stop losses and plan for entries and exits before you execute the trade.
That makes sense. If you look at silver market is almost 1/10 of the gold market. The volatility is in silver is 2x to 3x of gold. Okay, so they are crypto-based silver tokens. Do you see other crypto-based currencies coming in? Both of you, who would like to answer that question?
Yeah. So, be it silver or be it gold, continuously this market is evolving. Earlier we had only consumption through jewelry. Now people are, including gold and silver in their portfolios, be it in the form of ETFs, digital golds, digital silver, and be it form of cryptos. So it's just everybody wants to have that fractional amount of silver in their portfolio. So they're investing it in various forms. So yes, going ahead, cryptos could be the next one. That could also, be the part of the portfolio.
And just one question from my side. What do you see the events which are happening today in terms of geopolitics? How do you see them influencing the silver prices, both of you?
Yeah. So as I said earlier, a few of the indicators and drivers are, demand drivers or supply drivers, and some are just volatility amplifiers. So this current event of geopolitical tensions between US and Iran is a volatility amplifier. It is just increasing the volatility. But the long-term fundamentals doesn't change much unless we see a demand destruction in US and China in long term. So I think in short term, because of these tensions, safe haven demands will flow out, are actually flowing out. But yes, if you look at long term, we are still very bullish, and I think it won't impact the long-term scenario. We are in a secular bull market in silver, and secular bull market in any commodity lasts for at least 8 to 10 years. It's been 5 years. The secular bull market started in 2020. From $12, we have moved to $80. And secular bull market, we see prices going up by 10x, 20x, 30x. It's just we have gone up by 7x, 8x. So even I think in next 3 years, prices could double from here. So overall scenario doesn't change.
We can take the questions? Thank you very much. Okay. In which segments do you see silver being used? Defense sector, the use of silver, how do you feel about it? These are the questions I could remember. If you can tell about that.
So 90% industrial demand is coming up from solar sector, EVs, 5G sector, AI data center. This constitutes a 90%. Rest 10%, it is in different dentistry, it is in defense, all those things. So it is not much. 90% is, taken care of. That is growing by 5x from last 5 years, and it is expected to grow good.
5x?
Yes, 5x. It has grown 5x from last 5 years. In fact, AI data centers demand have gone up 50x from last 5 years. So these main sectors, main drivers of industrial demand, which constitute 90%, they are growing by a good amount. If 10%, there are many. So it doesn't make much difference, I suppose.
And it makes sense, right? Because AI was not present 5 years back. So any increment would be multiple x, 100x, right? Dr. Bharat, rely solely on indicators, or do you see price action, liquidity swaps, or fair value gaps?
Yeah. See, as technical analysts, what we do, our only goal is to identify the trend as early as possible, ride it for the maximum duration, and third is exit as per the exit strategies, and also manage the risk a long way. So I am purely a technical trader. I use exclusively the technical indicators. I use a lot of moving averages. Moving averages are the building blocks. They tell you the trend direction. And to test the trend strength, you use indicators like RSI and other momentum-based indicators. So I primarily rely on this classical methodology. And my exits are quite swift. Like most of times I exit when there is a lot of good sentiment, when the complacency is very high, people are extremely bullish. So I also use sentiment indicators for planning my exits.
So you mentioned that if silver breaks 62, you will change your view, correct?
Yeah, because...
And what would that level be? I'm mixing it with the question asked here. What is the lowest
See,
level?
62, right now we are placed at 75. 62 is the 200-day moving average. And for any asset class, the breach of 200-day moving average is a very negative sign. So still, I won't exactly define it at 62 because it's a moving average. If the silver price shifts from 75 to 80, the moving average will not, the stop loss is not 62, then it may shift to 66 as well. But you can have a 1% filter at the final stop loss level also, like 62 minus 1 or 2%. So
and
that...
what would be the, if it breaks 62, decisively breaks 62?
I have to see that how it breaks 62. Does it break 62 with a lot of momentum, with a lot of negative candles on a smaller time frame, or it's just a consolidation around 62? So I think the candles to a technical analyst are the fuel for the decision making.
How can we talk about silver and not talk about China, right? We need to talk about China. So what do you feel about China? China is going to ban silver export. I can add, I don't know, it's going to be treated as a rare earth metals, and you might see some other country putting some sanctions on it, some tariffs on it. Do you see any such risks, Dr. Renisha?
Yeah, so we are living in uncertain times with Trump administration, and we have seen a lot of uncertainties around the world in last one and a half year, and I see that next 2-3 years are going to be same till he's there in the power. So that is why I said that uncertainties will derive or would be the driver for silver going ahead. Like US included silver in the critical mineral list, there could be more countries like Mexico, Canada, or any other country, they could also include silver in the critical mineral list. Like China has put restrictions on export on silver, there could be other countries that could also put it. So yes, we are living in very much uncertain times, and certainly these factors are the tailwinds which will support the prices going ahead. So yes, I think if something happens, something like this would be a very much a catalyst or a driver or a factor that would again would be able to help prices cross $100 or $120, and prices might shoot up again. So this would be a catalyst if something like this happens.
Okay, thank you very much. So I think what we concluded, or what I am able to understand from the conversation is, A, silver is a very tight market. It's in deficit since last 6 years. In such a tight market, the demand from industrial metals is very good. Momentum is very good. Technically, it looks amazing to Dr. Bharat. And hopefully, in the next year or next couple of years, we should not be in a situation where both of them are on a difference of opinion when technically silver is broken down. Dr. Renisha is bullish and Dr. Bharat is bearish. That would be interesting, but I don't want to see that scenario. So, thank you very much.
Mr. Hiren Chandaria, why don't we also show the results of the poll that we were conducting? Ladies and gentlemen, finally it's a moment of truth. You've already heard our analysts out here. Mr. Chandaria, in his way, is probably, he's approached the same question at least 20 times in 20 different manners just to check the resolve of our analysts if they're still bullish on silver. And each time they have passed your test, sir. But let us see what the others have predicted for silver. We have the results here. For next year, these are the price predictions for the London spot silver price per troy ounce.
Wow, that's
2027.
Amazing.
At the end of this financial year, 31st March 2027, this is what the esteemed delegates here in the house have predicted for silver. And you can already see, I think the most popular price band is 110 to to 130 US dollars. Is that a yes? I need to ask Mr. Chandaria, sir. Is that a yes?
Yeah, I think so. We, in such a kind of price movement, as far as my understanding goes, it never stops at a particular level. And if it had to correct, it would have already corrected. It's holding on strong. Demand fundamentally is strong. Technically is strong. So I am bullish.
Let's have a look at the spot prices, MCX. IBJA spot silver price per kg. Ladies and gentlemen, you have your results here. The maximum majority going with 3 lakh to 3.5 lakh for a kg. That is 31st March 2027 prediction. So ladies and gentlemen, can we please put our hands together for our amazing panel up here?